Hello, in today's video we'll be taking a look at the Wednesday, July 29th session for SPX. Today was the FOMC interest rate decision day, so expected to have lots of volatility with everything that's going on right now with the war, with oil, with the new Fed chairman, and you know, basically lots of different possibilities getting the new Fed chairman in. What is he going to say in his 2:30 p.m. conference after the 2 p.m. Fed rate decision? Uh, since obviously we don't have Jerome Powell anymore and we have the new Kevin Warsh guy, uh, people were kind of on edge as to what exactly he was going to say, and eventually he said some things that spooked the market. So after an initial rise after the interest rate decision, we had a really steep sell-off at the end of the session. Okay, so what we're looking at right now is we have a split screen. So we have a 2-minute chart on each screen. We have the day trading GPS, SPX daily key levels, V 3.0 indicator on and on each one of these charts, and we also have the day trading GPS V 3.0 ribbon with multi-reset for indexes, stocks, ETFs, futures, Forex, in any global market. And what you're looking at is on the split screen is that on the left side of the screen we have the 9:30 a.m. index reset on for the ribbon, and then on the right side we have the standard ribbon without the reset on. Now, one advantage of this ribbon indicator with the reset is that you can look at it on either multiple monitors, having a full chart on one monitor with the reset on and one with the reset off, or you can do as we have now, a split screen on a single monitor. And a more conservative approach is waiting for confirmation from both sets of ribbons before making an entry in either direction. So we have the 9:30 a.m. candle marked off here with this line on both. As you can see here we have the ribbon with the reset 9:30 a.m. Reset on, and then here it is not turned on. So we get the hangover effect from the previous close, in which we have the downdraft starting since this was a gap down day. Here we have the reset on. As you can see, initially we did get a push up. We did not get up to the bull bear key price level. We still, every one of these closes ended up being below the bull bear key price level. Here we have the all red ribbon here. Here we have a starting off with a green ribbon here, but we do have closes below. So what we're really waiting for is confirmation from the ribbon eventually on both of these for dual confirmation. So with dual confirmation, you're looking for both ribbons to be aligned and for that alignment to come with either a close above or close below a main key level or a contextual level. And in most cases, in most sessions at the beginning of the session, the main key level that's going to be in play is typically going to be the SPX bull bear KPL level, and that was the case today in today's session. Now here you have at the 9:50 a.m. candle, here you finally get this down move starting, and you have an all red ribbon here. And if we look at the same candle here, the 9:50 a.m., you have, of course, an all red ribbon here. Now this particular candle is closing below S1, and it's also closing below PML. So whether you want to use the PML as the pre-market low, as the level that you're taking the trade on, or S1, is totally up to you. If you're going to be using PML, then you would go into the SPX daily key levels indicator and go down to that section for contextual levels, bearish trade off of PML, and select either your standard stop loss or your tight stop loss for that. However, if you're using S1, then the S1 standard stop is going to be the first midpoint above S1, which is the mid BBKPL S1. Okay, so here we have the S1 close below. This would be our standard stop here. As you can see here, we do get a move all the way down to S3. Of course, that is a two-level move. We're calculating it from the level that we're basing the trade on, S1. So S2 would be a one-level scalp move. There is no contextual level before that one-level scalp move, so there's no micro scalp available in this particular session for this particular trade, because a regular scalp is a one-level move. Micro scalp would be if there was a contextual level right before the one-level move. It's far enough away from the entry candle, then you could also look at a micro scalp. That's not the case here. The only contextual level happens afterwards. The mid S2, S3 is the 1.5 level move from the level that the bearish trade is based on. That's your minimum required level for a regular trade. And then the two-level move is going to be the minimum ideal move, 2 levels away from the level that we're basing the trade on. So that's going to be S3 here. Okay, so after that, we do get, after this downdraft here to start off the session, during the lunchtime, we do get a turnaround here. And now you're looking for, now that the transition starts in the ribbon, we're looking for a close above a contextual level or main key level. Main key levels, of course, are going to be the bull bear KPL, R1, R2, R3, R4, R5, and R6, or S1, S2, S3, S4, S5, S6. Then we have our 5 contextual levels. We do get a move back above YDL. Again, we have an all green ribbon here on the close above YDL. We also have an all green ribbon above S2. So regardless of whether you're doing YDL or S2 here, you have the all green ribbon, and it depends on which one you want to base the trade on. If you're basing it off of S2, bullish trade off of S2 is the standard stop loss is going to be the midpoint below. Again, when we started off here in a bearish trade, the standard stop loss is first midpoint above, since it's a bearish trade, midpoint above the level the trade is based on. Bullish trade here, opposite, so it's going to be the first midpoint below. If you're doing a bullish trade off the YDL, again, you go into the user control panel, go down to that contextual levels trade section, select YDL, bullish trade, and then either select standard or tight stop loss. Okay, so the S2 trade here does not hit the stop loss, like the bearish trade here did not hit that stop loss. And we do get a move. Here is the 2 p.m. candle for the interest rate decision here. So you can see we got that kind of a monster candle here, resurging back up. Eventually does hit the mid BBKPLS1 here, as you can see on that wick here. So in an S2 trade, S2 bullish trade, one level scalp is to S1, 1.5 level move to mid BBKPL S1 is your minimum move for regular day trade on this bullish trade from S2. Now it did retrace back, however, on the retrace, still no stop loss hit. And then we do get a move all the way up to the bull bear key price level. That is going to be a two-level move, two-level minimum ideal move for regular trade, because from S2 to the bull bear key price level is 2 levels. Now in this case, it did surge up beyond that, so this would be a 2.5 level move, and then the R1 is a 3 level move all the way from the S2. Now after that, Warsh said some things in his conference after a good bit after it started that spooked the market, so we get this extreme move down. Starts here at the 302 candle and goes all the way to the end. As you can see, end of day here, we get a move all the way down to S4 where it stops. As far as the ribbon here, if we go ahead and move this so we can see more clearly here, you're really getting a move here. So you're getting a all red ribbon pulling away from the base, close below S2. And that's going to be on both of these ribbons. One with the reset on at 9:30, the other one with it off. This case, since it's S2 bearish trade, first midpoint above is your standard stop loss. Move to S3 is your one level scalp. No contextual level. This contextual level is too close. We're looking mainly for something that is closer to the one level move, but happens before. So there is no contextual level, so there is no micro scalp opportunity as this contextual level is too close to this entry. You're looking for a micro scalp, you're looking for something that's before the one level regular scalp, but far enough away from the entry candle. So we have a one level scalp here, 1.5 level move to mid S3, S4, and then we have a move down to S4, 2 level move. Okay, one thing that also helps, especially in volatile sessions, is to also look at the VIX. My particular viewpoint is if I'm trading a 2-minute or 1-minute chart on SPX, the VIX chart I really want to see like a 15-second chart and use the ribbon indicator on that as well. So just to give you an idea, if we move this in here, so this is the VIX 1D, 1-day volatility index. You know, you could also use, just the regular VIX, if you wanted to. Either one's fine. But basically, the idea here is that, you're looking at, we'll go back to the VIX 1D. Is you're looking for this to be kind of additional confirmation of what is going on. So let me get that back here. Sorry. Okay. So basically, starting in the morning here, you've got this move up on the VIX. Just so that's giving you more indication of the continuation of the move down here. So we're getting increased volatility basically on moves down. Typically you're going to get, this increased look here. So the ribbon helps in that respect. I like a 15-second if I'm trading 2-minute here or say a 1-minute on SPX. Typically we trade 2-minute. I'm just for people that trade say 1-minute, 2-minute, or 3-minute. My preference is 2-minute on SPX. I'm looking at a 15-second chart on this because I like to get kind of an early um, advance notice, so to speak, of what's going on here. So you can see here this huge drop right here is when we get this up move here, starting at around 2 p.m. So that's the Fed interest rate decision. So they normally hold the volatility high anyway on Fed days as well. But in this case, we have a high volatility Fed day and we're getting a significant move down. So that even made it even more extreme than it would normally be. And then typically after the Fed announcement, you'll get this volatility crush, uh, usually instantaneously right after that. And then depending on which direction that's going in, it's either going to resume or continue with the VIX going down if it's going up like it did here. Okay. Then, around the 3-ish, after some of Warsh's comments hit people the wrong way, then we get the move back up. So it's a lot easier to see with the ribbon what exactly is going on here. And so you have, this extreme move down. So that's when this starts here, goes back up, and basically, doesn't quite hit the highs, but retraces back up near the highs here. Okay, so that's going to wrap it up for today's video. If you have any questions regarding the SPX daily key levels indicator, the V3.0 indicator, or the ribbon V3.0 multi-reset indicator, you can email us at daytradinggps@gmail.com, or you can also, if you're interested in purchasing either the SPX daily key levels V3.0 indicator by itself or our SPX indicator suite, which includes SPX daily key levels V3.0, the ribbon indicator, and our special VWAP indicator for SPX CBOE and the mini SPX index, the XSP. Some of you may not be familiar with the problem on TradingView. It's not really a TradingView problem. It's just a data source issue with CBOE global indices, that if you're on SPX CBOE or XSP, the mini index CBOE, and you try to use native VWAPs on that are built into TradingView on either one of those symbols, you will typically get a red exclamation point, volume data not available, which I could go ahead and show you now. Okay, so if we go down to technicals built in, we go to volume weighted average price, and then VWAP auto anchored. We'll change this back to SPX CBOE. And we'll just turn the ribbon off so it's a lot easier to see. And as you can see here, there's no VWAP. Got a red exclamation point here, no volume data. A lot of times it will also show on this one, but as you can see, neither one of these work. There is no VWAP. Go ahead and change this to 2 as an example. No VWAP. Now we'll go ahead and put hours on. Okay, DTE GPS, VWAP for XPX CBOE, and also XSP CBOE. So now you have VWAP. Turn hours off, no VWAP. Native VWAPs just don't work on either one of those symbols. Ours does because ours is made with external data source, institutional grade data source for SPX. So it does not use the CBOE Global Indices data feed. The advantage of this is you can have it all on the same chart. So usually the workaround was to, maybe get a futures, ES futures or SPY and just put VWAP on that and sort of, gauge that. But that means that you either need to have a dual screen or you need to have multiple monitors in order to do that. It's just a lot easier to have everything on the same chart. And so this VWAP allows you to do that. So whether you're on SPX CBOE or the mini index, the XSP. So the VWAP is also included in the SPX suite along with the ribbon indicator and of course our main indicator, the SPX daily key levels V3.0. If you would like a discount promo code on either one of those, whether it's just getting the SPX daily key levels V3.0 by itself or the SPX indicator suite, which includes all three of those indicators, then simply send us an email at daytradinggps@gmail.com to request a discount promo code. All right. So for some of you who may be wondering how our indicators are working for people who have purchased them, then what we'd like to do now to close out the video is just show you some screenshots of feedback and reviews we received from traders who have bought our daily key levels indicators and use them on a daily basis. All right, so thank you for taking your time to watch this video today. If you did like the video, if you could please hit the like button, we'd appreciate it, as that helps us with the YouTube algorithm. If you'd like to leave any comments in the comments section, if you have any questions regarding the indicators, you can leave us comments there, or you can simply email us at daytradinggps@gmail.com. All right, thank you for taking the time to watch the video, and we wish you much prosperity in all your future trading.
For those interested in seeing how other traders are using the indicators and the daily key levels trading framework, here are some reviews and feedback we have received from customers who have purchased and used the indicators. While individual results will always vary based on experience, risk management, and execution, these reviews provide insight into how traders are incorporating the daily key levels indicators into their own trading processes. You can view additional customer reviews and feedback at daytradinggps.com. Thank you.